So here's the first part, which is going to look at the fundamental basis of looking at trends. Very similar to, obviously when you hear of spotting trends in the stock market, you think of the technical analysis. And the second part of the presentation will, of course, focus on that. But there are also ways to spot trends in the stock market based on fundamental analysis. And in this presentation, we will attempt to look at some of those ways. Essentially, when we look at catching trends in the stock market, all of us wants to know, at what point should we buy or sell a share. So let's break down the share price. Essentially, if you think about it, you can break down the share price into the profitability and valuations. तो अगर एक share है जिसकी EPS is say 10 rupees and it's 80 rupees a share, then you're attaching a price to earnings multiple of 8 times. Okay? So you can break that 80 rupees of share into 10 times of 10 rupees EPS and 8 times price to earnings. So agar aapne share price, if you want to understand where it's going to go, maybe you need to understand where profitability is going to go and where valuations are going to go. So if you can catch those trends right at the right point of time, then you can maybe spot how the broader market is going to do. Now, in terms of profitability, what we are going to focus on is volumetric growth, right? So if there's a cement sector, then we're talking cement sales. If there's auto sector, then we're talking auto sales. So that is our proxy for profitability. It's not the only thing. Of course, you are ignoring margins in this, but catching volumes or the outlook for volumes can help you gauge the outlook for corporate profitability. And similarly for valuations, if you can pinpoint, if a stock is cheap or expensive relative to history, that can help you maybe identify the right sort of entry points. Now, in terms of profitability, as you can see from this slide that I'm sharing, we've seen a V-shaped recovery in the KSE 100. And it's not surprising to see that this has been mimicked by a V-shaped recovery in a lot of volumetric sales in a number of sectors. So for instance, if you see what happened in cement sales or auto sales, I mean, auto is a great example. April, no sales, May, next to nothing. And then we've seen a quick rebound. So as the outlook for corporate profitability has improved after the lockdowns ended, you've seen a rebound in sales for various sectors, whether they are domestic facing sectors or they are external facing sectors such as textile exports. And so the KSE 100 has followed them. So as you can tell, if you could pinpoint this trend ahead of time, you could potentially pinpoint, good entry points in the KSE 100. Now, the issue with this is that data inevitably is reported with a lag, right? So July cement sales, will be reported, sometime in August. Same for OMC sales, so on and so forth. So what do we do then? I mean, this is data that is useful, but this is backward looking data, because by the time the actual car sales data comes in, the stock market might have already priced this in. So what do you do then? What you can do potentially is look at some leading economic indicators, right? And maybe you can see where data for May or June might give you an inclination or a hint towards what is to come. So if you look at machinery imports, if people are importing machinery at this point in time, if the corporate sector is importing machinery, that potentially points towards expansions, a few months from now, right? You can look at energy usage, if that has started to bottom out and maybe trend upwards. We also look at, from a fundamental perspective, truck sales. Now, by itself, truck sales means nothing, but that means that it could show that the real economy has started to pick speed. The wheels of the real economy are turning, and if truck sales, of course, are going up right now, it could mean that the economy has turned the corner and the outlook is better. You can also have a look at maybe credit card spending. So the central bank also puts out this data, the outstanding balance for credit cards at the end of every month, and you can use that to gauge if the consumer has started to spend. But the drawback with even this is that even this sort of comes with a lag. And obviously, if we are catching trends, if these are all data that are coming through with a lag, then does this really help us? So finally, what you can look at in terms of the outlook for corporate profitability or the trends in the real economy, you can look at some high frequency indicators. Now, the drawback with this is that maybe a lot of this data will not be available, but some is. So I think in the papers every day you do you can track the daily activity at ports, right? So the rest in the previous two slides, what we discussed was maybe data that is coming through on a monthly basis. If you can maybe build a database of the daily activity at ports in developed economies, maybe not so much for Pakistan, you might have tourist arrivals. You do end up with unemployment claims data. If you can have point of sales data, I think all of this, maybe this will come through on a weekly basis or even a daily basis, and that is something that can help you determine if there has been a turning point in the economy. And if you can catch that turning point, then that is something that you are getting in advance of maybe the other people. So in terms of the stock exchange performance, this data, if you can track it, can help you give you a sense of how corporate profitability is going to behave in the next few months. By the time you wait for the actual result to come, might be a bit too late, right? So you want to look at this sort of data and preempt what's going to happen to corporate profitability. Obviously you can also talk to company managements as well. That is something that analysts do for you. They will be talking to companies that they cover, and bringing across that sort of expectation across to clients. But certainly you can do your own homework and track data on your own. And the other thing that finally, I mean, in terms of corporate profitability, the another thing that you can look at, and maybe this will come through in Pakistan with time, but globally people have started to focus on big data, trying to catch trends as they occur live. So you can sift through maybe Twitter trends. If people have started to talk about a product, maybe a new car has been launched, and a lot of people have started to talk about it on Twitter, that can give you a good sense of maybe how that car will do in terms of bookings, right? You can maybe look at Google search trends. It's possible to do that and see, what are people searching for, what are people looking for online, and give you a hint as to what they're thinking and what their, how their consumption can pan out in the next few months. So that is again and something that you can use to gauge the outlook for corporate profitability. Right. So that's the first part of this presentation in terms of catching trends. So just to recap, I mean, we can look at monthly data, so volumetric data for a lot of sectors. We can also look at maybe monthly data that will have an effect a few months down the road. So truck sales might have an effect a few months down the road. Machinery imports will have an effect a few months down the road. So you can look at these leading indicators. And then you can look at some real-time indicators, such as the daily activity at ports or Twitter trends, POS data, and that can give you a sense of the how the economy will shape up. The second part of this presentation is to do with valuations. I mean, just to circle back to how we started off with, if you break down a share price, it's the share price is simply the profit that is there per share price, per the number of outstanding shares, the EPS, and multiplied by the valuations, the price to earnings ratio. This is a very simplistic way of looking at it, but I think it's useful. In terms of PE, I think it's good to get a handle on what is a good PE and what is a bad PE in Pakistan. Like for instance, in India would be at 20 times price to earnings. The US markets are at more than 25 times price to earnings. So by that context, Pakistan's 8 times price to earnings multiple looks very cheap. But it's important to get a grip on what is cheap in Pakistan and what is not. Now, historically, since 2006, the PE ratio in Pakistan has typically fluctuated between 6 times and 12 times. Now, it has broken through below 6 times, most emphatically in the global financial crisis of 2008 and 2009. But if you count that as a black swan event, then the typical range has been 6 times to 12 times, right? So as you can see right now, the current PE is 8 times, and so relative to history, we are still on the cheaper side. What I can tell you is that, again, this might not help you make your buying decision tomorrow or day after, but it can help you identify points in the cycle where you feel that right now is a good time to buy or right now is a good time to sell. So in general, when the price to earnings ratio converges towards 6 times, that is the point you want to buy. And when it goes into double digits and starts to converge towards 12 times, that's the point where you would like to sell. So as I said, currently it's 8 times on forward. The long-term average is 9 times. So the market looks cheap. But then the next question would be, why is the market getting stuck at this point in time if the outlook for corporate profitability is strong, and the PE is also on the cheaper side? So we urge you to look at maybe more information. And this is something that people active in the market can relate to. They will have been frustrated by the lack of performance by the banking sector and the oil exploration companies, which are the two heavyweight companies on the KSE 100 now. And when you exclude banks and ENP, the current valuations are actually at a slight premium to the long term average. So I think that sort of tells you why, is one of the reasons why the market is getting stuck since the last week. It's not as cheap as it used to be. Now, this does not mean that we should turn bearish on the market. What it simply means is we've come to certain valuation levels where you can't expect the rally that we've seen in the last 5 or 6 months to continue just like that. It should continue. We're still relatively cheap, if you include banks and ENP, but we're not as cheap as we were 6 months ago. So you can expect the market to go up, but maybe more gradually now. I think it's time to become a little bit more selective. So this is what this data is telling us, that trend for the last 6 months, it's not going to be as smooth sailing as it, or as easier to invest in the equity market as it was in the last 6 months. Finally, what determines this PE? So I mentioned, the PE has gone up and the PE has gone down. Buy when it's 6 times, sell when it's 12 times. What determines this PE? That I can tell you is basically driven by interest rates. It's as simple as that. When interest rates are going to go down, equity valuations are going to start looking more and more attractive, and they will re-rate. So yes, while there has been a volumetric uptick in sales for a lot of sectors, what you've also seen is interest rates going down, and you've seen liquidity flow towards Pakistan equities. So what you've seen, is that the price to earnings ratio has re-rated. As you can see on the slide, the graph on the top left, the PE has re-rated from close to 6 times, which I've told you is historically it's been, that tells you it's the bottom. And it's re-rated to roughly 8 times right now, and that has coincided with interest rates going down. What determines interest rates? Obviously there is that inverse relationship with the stock market valuations. When interest rates will go up, stock market valuations will go down. When interest rates go down, they go up. So it's very important to sort of get a handle on what interest rates will do. Obviously the monetary policy was yesterday. Interest rates stayed static. We expect that for the remainder of this year, at least, interest rates will remain static. But then there has to be a point in time where they will start to go up. And what the central bank has made very clear, and I think better than in the past, is that it's clearly said that we are going to be targeting inflation. So you need to get a sense of when inflation will turn the corner and start to go up. When inflation will turn the corner and start to go up is when the central bank will probably start to consider, increasing interest rates. For that, the trends that you want to look at, obviously would be food prices. So you can look at food prices in Pakistan, but you can also follow the CRB index on Bloomberg. This is commodity prices. So if commodity prices globally start to go up, inevitably Pakistan will follow suit. And you can also have a look at oil prices globally. If the outlook for oil prices changes, I think that might be, together with food prices, the two most important factors for when inflation will turn the corner in Pakistan and start to inch up. So that is something that you need to keep a track on. When inflation will start to go up, so will interest rates, and that will probably make it difficult for the market to continue re-rating. So that's, obviously, where to catch the trends in terms of valuations, a historical valuation range. It's good to keep that in mind, but it's good to keep a track of commodity prices. It's good to keep a track of inflation outlook. Finally, my last slides, in terms of markets, you can have a look at, who's been buying. Individuals tend to have a good sense of when to enter the market. I mean, the saying is that, follow the wisdom of the masses. So when there has been buying by individuals, and this data is all available at the NCCPL, that's usually a good signal that investor sentiment is good. You can also have a look at equity AUMs as a percentage of AUMs by mutual funds. You can see this is the graph on the top left. So as you can see, mutual funds were sellers, but now they've turned the corner. So it could be that they're seeing more liquidity flow in. So that can also be used as an indicator of how the stock market is expected to behave going forward. On this slide, I've kept a couple of more indicators as well. You can look at leverage in the system, and you can look for bank lending for investing in shares. Those are also usually good sort of indicators for liquidity in the market, which is usually a good proxy for how the market will behave. And finally, in the interest of time, just the last slide, going to go over it very quickly. We've gone over how we can catch trends, typically when the market is going up. But what can you catch a trend quickly for when the market might turn the corner and maybe go down? Historically, in Pakistan's case, there has only been, one major indicator for when the market obviously has crashed, and that's the FX reserves. Now, for this, I would urge you to keep a track of the SBP's FX reserves, and especially the import cover. And historically, whenever the import cover has gone down below 2 months, and there is no hope for an imminent IMF bailout, then the market has tanked. So right now, our import cover is more than 3.5 months. That's fine, and our reserves are expected to build. But if imports go up or if our reserves start to slip and go below 2 months, that's usually a sign of time that it's time to sell. So that's it for my part of the presentation. I apologize for rushing through this, and I apologize for the late start, but we were having some technical difficulties. So thank you for being patient with us. I am going to hand over the presentation now to my co-speaker, Mr. Ehtisham Khan. And then he can take it from there. Thank you so much for your time. Ehtisham, you're the host now. You can share your screen. Please go ahead.
Well, thank you, Raza. And I hope everybody can hear me right now. All right. So thank you, PSX and Institute of Financial Market Pakistan, for giving us this opportunity. And thank you, audience. I appreciate your time. I know everybody has a very busy schedule these days. Just a little bit about myself. Those of you who know me, that I've been around for last 14, 15 years. I have involved in managing institutional equity fund for last 13 years. And I'm the first investment manager in Pakistan to be able to qualify as a CMT charter holder. And I live in a world of regulation, right? So I do a lot of vlogs on social media, YouTube, Twitter, and other accounts for technical analysis courses and CMT curriculums. I'm heading the local CMT chapter of Pakistan as well on behalf of CMT Association USA. And at present, I'm talking from my new venture, which is an automated stock investing platform. This is an advisory platform, where we are trying to leverage machines and technologies in order to, aiming to serve our client in a proactive manner. So today, I hope I can show you some important information here that will help you to spot the market trend and the things that will provide you an idea that you can take back to your trading desk and use in your investment decision-making processes. So what I'm going to tell you today is basically over the period, what I have analyzed. Like, I personally feel like fundamental analysis and technical analysis go hand in hand. And this is very important for investment decision making to be, go with the combination. I realize the point that knowing good business from a fundamental standpoint is very important. Knowing companies earning its valuation is important. But at the same time, I believe that, you should have some mechanism, you should have some system that tells you how to basically behave in a dynamic market situation. And I believe like momentum strategies in conjunction with your fundamental analysis approach is a very robust combination in terms of gauging market directions. So what I'm going to do today, I'm going to quickly touch upon some important techniques within the momentum strategies, uh, some important beliefs that I think it's important to share before telling you some techniques about gauging the market. So without further ado, let's get started. I want to start with the sort of preambles here. Like, I think most of the time investors fail to understand what they are doing in the stock market. So what I believe is your investment philosophy, your belief system matters a lot before investment in stock market. And as we all have a different beliefs and different strategies, so obviously we believe, like, just to give you a perspective, it's very into the idea that you can only trade and invest what you believe in. So from that perspective, these are my beliefs in which you don't need to wholeheartedly agree or disagree. I think it's important to develop some sort of belief system or something that allows you to take the investment decision making process, easier and simple. So what I believe, that stock market goes through bullish market phases to the bearish market phases. So you should have some mechanism to extract profit on a regular basis. And it's just a mechanism, like anything can happen in market at any given point of time. So, I mean, we all thought that 2008 crisis was the worst event of its kind, like until this global pandemic happened. And after this COVID-19, the world, stand still. So in this environment where physical assets like crude oil can have a negative price, and talks about the negative interest rate in US, how can we protect our investments in a volatile, uncertain environment? It's very important. We have to have some mechanism and some indicators, some guidelines that will help us to understand uh, what is the genuine trend is, where the market is going, and what are the growth factors. So I believe, like, small losses are much better than the big losses. So we need to also realize the point that there has to be a system where we understand that we are wrong in the market. We are into the investment business, so it's completely okay. It's completely okay to be wrong. Like, so knowing when we are wrong and when we are right is very important. So what I believe, like, we should have a system, and we should have some parameters that tells us to understand that our investment decision is not in line with the market direction. And I also believe that holding a falling asset in a declining market is just like a self slaughter. And this is the point which Raza was also trying to make it, like, it's liquidity that drives the market in the shorter run, and it's a fundamental that prevails on a longer run. Why I'm telling you this, I'll just show you in the next couple of slides. But before that, I would like to shed some light here that I think the perception you might have right now about technical analysis is green is something like that, right? But usually it's not correct. In fact, charts are neat picture that graph, the price movement. It is the picture which helps you to identify the actual market directions in a pictorial format. So just like this, I'm going to show you in the next slide. This is the neat picture. Here we can easily analyze what happened in stock market. By the way, this is KC 100 index of a daily chart. And you can see, like, in the first quarter of 2020, market declined, and then it started to move up again on the basis of different factors that we will going to discuss it. And it went up in a higher high and higher lows pattern, which is technically a bullish sign. So interestingly, the news flow during this time period was entirely opposite, right? So we also need to understand, like, what was the news flow during this time around when the market was making its lows. Market के जब low लग रहे थे, market अपने lows पे थी, news flow क्या था? and how market was behaving and what kind of sentiments we had at this point of time. So just for the learning purpose, understanding how news flow is basically impacting market, how psychology is basically impacting market, I'm going to show you, the famous newspaper magazine, The Economist, was saying during this time around, what they were saying. Just at the bottom, and this is, by the way, it's a good one. Just at the bottom, literally at the bottom, the Economist was like, they literally closed the world with the sign on it, right? As you can see here. So this was the sentiment you can gauge from here when the market was going down. And afterward, just recently, we got another one. It's a free money, right? So they talk about a change of sentiment and all, and it's a joke. Like, it's market has inched up like 50% from the bottom, so no wonder. So we need to understand how price action works, how sentiment works, and how basically market starts to perform on the basis of different factors that we are going to discuss here today. So from the news flow point of view, if the news flow was so negative right at the bottom, what drive the market on the higher side? And the rally that we have witnessed, which broken all records. And yes, the answer is again the liquidity, which was one of my belief, that liquidity drives the market in shorter run. We witnessed that together government and SBP took timely monetary stimulus measures in order to support recovery, right? They lowered interest rate quite significantly, which was much needed to restore business confidence and safeguarding financial stability, and injected almost like 1.58 trillion rupees in the system. So liquidity started to came in, and the market started to make higher highs, which improved the sentiment. And yes, we, business confidence also restored later on. No surprise for me, right? So the bond market became unattractive as well, because after the substantial decline in interest rate, bond market declined quite substantially, and equity valuation, as Raza also said, become more improved and attractive. Market started climbing up again. So let me tell you one thing. Like, as I told you, I have been into the investment decision making processes for the last 13-14 years, and I know for the fact that when market starts going up, all these mutual funds and financial institutions, they have a limitation. They have a limitation to report on a month-on-month basis, week-on-week basis, daily, day-on-day basis. So they have a limitation. When the market is going up, they can't sit idle, right? They can't remain underperformer for a very longer period of time. So directly or indirectly, they have to recompose their portfolio in line with the market, and that is exactly where जहाँ पे ज़्यादा liquidity पे market के अंदर आती है और फिर market मज़ीद यहाँ से ऊपर जा रही होती है. So this is just one point, that liquidity is basically the main factor which drives the market on the higher side. And so anyways, so to gauge the market direction, it's very important to consider key trend and their prospects. It's good to see day to day, which keeps you updated, but at least you need to see what is the trend, what is the key trend on month basis, quarter on quarter basis, and week on week basis, and then get the macro perspective. Like, what I mean here is the big picture, the things that you need to watch before starting investment in market, engaging the market direction. So what I am watching before investment, I'm going to quickly touch upon today. Some macroeconomic indicators, some broader indicators which will help you, which is the kind of hack that you always analyze, and you will understand where the market is going ultimately. So you need to see the emerging market indices, you need to see regional indices, global perspective as well, and to see the number of stocks which are basically converting into the bullish zone, and the number of stocks which are basically converting into the bearish zone. So all these indicators are actually very helpful to understand and gauge the market direction on a longer run. And like for example, this is a long-term chart of USD PKR on a monthly basis from 1998 to 2020. And as you can see, like you need to see the local currency impact against the USD. And you can see here, like we used to be around 44 PKR against 1 USD back in 1998, and right now we are 166 PKR against 1 USD. So one thing you can analyze, just to give you a perspective, that's the devaluation and the constant depreciation factor is there. So this is a visible trend, and if you just more closely analyze it, you can see here we get a period of stability. We got a period of stability, and then the sharp devaluation, then again period of stability, kind of, then devaluation, then again stability, and then devaluation. Reason for being stable can be disciplined macroeconomic policies, especially under IMF program, control flow, and many other. I don't want to go into the details, but what we can analyze here, that after every stable period, we get this kind of rapid devaluation in the currency. And on an average, 7 to 8% devaluation is always there. Historically, we have witnessed, but the trend is very common. After this stability, we get devaluation, and then we get another period of stability, then again devaluation, and then we have recently witnessed a sharp devaluation in currency. And we might see, once we get back into the IMF program, I personally foresee that we might see a stability in currency again, which is a favorable situation for the equity investor once you get the stable currency. So this is one of the factors that you need to see how the currency trend is going. And this is another very important thing. This is just the secondary market yield I would like to mention here. You need to watch a bond market perspective as well. It is very important to see what the interest rate is doing overall. And this is basically the 10-year PIB yield and state bank discount rate spread. So on the top, you can see the 10-year PIB yield and state bank discount rate. And at the bottom, this is the spread. And this is very important to see when the secondary market yield started to come down, we get a case for the lower interest rate. And like, for example, in 2008 as well, we witnessed the negative spread, and then we got a rapid deceleration in discount rate. And then again in 2020, we got the same negative spread, interest rate decline, and we are relatively in a comfortable situation. So as far as the currency is concerned, it's going to be stable for the next couple of years, at least what I believe. At the same time, interest rate is going to be stable for the next couple of quarters. What I personally believe, as far as the spread is concerned and as far as the technical analysis is concerned, it looks smoothly fine at these levels. So there is no problem at all. We have seen in 2008 as well, and again in 2020, the similar situation happened. Interest rate, declined, and we are in a softer zone once again. This is another very important, parameters that I would like to mention here, just to get a feel of what the global market is doing. And for me, S&P 500 is better representative in terms of what's going on in the global equity market. And certainly you can get the sentiment outlook as well. If the S&P is doing good, obviously you can get the feeler what the global market sentiment is going on. And until now, like, it touched the high of like 35.88 just in the beginning of this month, and right now it is under the correction. So you can get a sense at least to see what is happening in the global market. Again, this is a very important chart where I can, this is a KC 100 index and the blue line, and this is basically the percentage of stocks above 200-day moving average. So from the technical standpoint, you certainly need to take the note of that. Like in 2019, not a single stock was trading above 200-day moving average. not a single stock was trading above 200-day moving average. And the same thing happened back in 2008 and 2009 as well. The stock was not trading above 200-day moving average. And right now we can see that this percentage is improving, which is showing the overall market depth is basically improving from a technical standpoint, and market is improving. Overall stocks as a percentage of index is above 200-day moving average. So it's a favorable situation for the equity investor in Pakistan. Again, this is always, it's always very important to see the KC 100 index trend in a dollar term, because mostly in Pakistan we see KC 100 index in PKR. So it's also very important to see the KC 100 index from the foreigner's perspective and to see where the supply zone and the demand zone comes. Because one of the advantage of technical analysis is basically you can easily identify where are the supply areas and where are the the demand areas. And if you just look at closely from the technical standpoint, you can see these were the supply areas where we got the supply, and then the market declined afterwards. Once it touched the demand area, it went up continuously till 2017, and then later on again it declined again. So the favorable situation is like the market in dollar term has again touched the bottom, which is again a demand area, and we might see some rapid acceleration again for the next couple of years as far as the dollar based KC 100 index is concerned. Again, this is KC 100 index on top, and the spread in blue line at the bottom, which is showing the 200-day spread against the KC 100 index. And again, this is a very important technical tool. If you just analyze it closely, you might see like the 25% positive here, 23% negative here, and again around 22-23% negative and 21%. So normally, historically, we have seen like 15% spread negative in a declining market and 15% positive in a rising market. But this is actually the opposite of the parabolic situation which we witnessed in 2017. When the market touched the high of 53,000, we went as high as 25% of the spread. And we kind of normalizes all those rallies that we witnessed in the last 10 years and bottomed it in a negative 23%. So from the technical standpoint, we have basically corrected well. The bear market was matured right here at 23%, and later on we saw this improvement in the spread as well. And this is just the last section of my presentation where I will quickly touch upon some trend identification approaches and some ideas about trend line, moving averages, and divergences. So from understanding a trend line, I believe that identifying trend of stock market is technically very simple approach. We select two highs and two lows, and then we understand whether the supply area will hit first or the demand area will hit first. So we get a support or resistance on a very simple basis. Just for the interest of time, I'll quickly touch upon the examples. So here you can see like these are the 2 points, the point 1 and point 2, and we connected this 2 point, so we got a slope. This slope basically tells you whether if we are touching the peaks, so we will get the supply area, and if we will touch the bottoms, we will get the demand area. So this trend line basically tells you the demand area and the supply area. It's in a very simple term. And so just keeping this approach, we want to apply this in a Pakistani market, and let's see if this approach is applicable in Pakistani market or not. So here it's a long-term chart of KC 100 index. As you can see, we have connected two peaks, one peak from the 1995 market and another one from 2004 market. So by connecting two peaks, we get the demand side, like the supply side. So we have an idea that this trend line can potentially be the resistance line for the market for the upcoming years. And let's see what happens if we just extend this trend line on the right side. We can see it touched the high of 2005 and again in 2007. So the supply area is appropriately mentioned with this trend line, and we got the exact idea whether this market will go up above this line or not. So in a very simple term, this trend line is basically the resistance line for KC 100 index, and we have seen it impacting the market whenever the market try to touches this. Just a similar line, like the same line basically touched the 2017's high as well. We got this slope, we extended this slope on the right hand side, and we witnessed that the market exactly touched the high of 2017 from the same trend line. So this is another very important approach to understand the supply area and the demand area, and it might help you to understand the entry and exit point as well. Similarly, the same trend line can help you to identify the demand side as well. Like for example, we touched these two lows and we extended it on the right hand side. So we got this demand area. And as we can see, this is a long-term chart of Pioneer Cement. Whenever the market went up and declined, it got the support from the same support zone. And later on, we got the high as well. And once this support line, which is basically the demand side, when the demand is basically neutralized by the supply area, we saw this breakdown of the trend, which is a sell signal technically. And see what happened. Once the support is broken here, we got a massive decline in Pioneer Cement. Same with the Maple Leaf Cement. This is a long-term chart. As we can see, the resistance line is appropriately placed. Whenever the prices are touching this supply area, we got a massive supply. And whenever it's touching a demand side, we got a massive pullback until the supply area again. So this is a long-term channel support line. And once we analyze it critically, we can analyze back in 2017, it's broken the demand side and fell down again, the massive decline again. So this is the last basically very important approach of gauging the trend, which is a moving average. And again, moving average are very popular and versatile for identifying price trend. It's a kind of a trend following approach and lagging by nature. So you need to understand it's basically a laggard indicator, but at least it gives you a clarity in the trend and smooth out the fluctuations. So we might get two kind of indicator. One is simple moving average and exponential moving average. In the interest of time, I will directly jump on the example so you would see how moving average is basically working in Pakistan. So this is a long-term, again, KC 100 index chart. We have a 200-day exponential moving average in orange line, and again, the 100-day moving average in blue line. Basically, the crossover is actually your buy call from the lower side, and the same is basically the sell side. If the crossover, the short-term signal crosses the long-term on the lower side. So you can see easily, like in 2012, from a moving average perspective, we got a buy call in the market. And again, we got a sell call in 2017. And yet again, we are getting this buy and sell call for the long-term averages. So from the moving average standpoint, again, market is in a favorable situation. Now coming to my last topic for today, which is a divergence, is a very, very important topic, and it's very important to understand whether the price movement is basically confirming the RSI and MACD or not. This is exactly opposite of the convergence and confirmation approaches, and it's give you a warning signal that the market is basically, the trend is about to reverse. So this is a forewarn indication, and this kind of indicator is very important to understand where the market is overall heading to. So I'll quickly touch upon the example, and you would understand the importance of this indicator. This is basically the positive divergence and negative divergences examples that I'm going to show you. This is a long-term KC100 index chart on a daily time frame. And as you can see, the prices are going up, and the RSI is also confirming this up movement. But if you just critically analyze this circle area where the prices are moving up, but the RSI is coming down, it's a negative divergence signal which points you out that the market is basically weak. The velocity for the market is weakening day by day, and it can come down anytime. And later on, as you can see, what we witnessed, a dramatic decline from the highs, right? So this is the example of negative divergence. Again, another example, like when the market was heading to 53,000, we had this similar divergence approaches, a divergence signal, and then you can see the market decline from the 53,000 level as well. Market was moving up with the confirmation signals, and later on when the prices were moving up, the RSI was not confirming it. It was a sell signal technically, and the market crashed later on. We got some positive divergences as well. Like for example, when the prices are going down, RSI is not going down. It's a signal to buy, and then we witnessed that the market went up again. So on this note, I would like to conclude my session. I hope obviously these approaches might help you to understand the trend in the market. I just want to quickly, conclude my points. You need to understand the higher high, lower low approaches, the trend line, moving averages approaches. You need to understand what the global market is doing. You need to understand the ratios that I've just discussed, and you need to see this divergences approach as well. I hope this presentation has helped you a lot. And on this note, I just want to conclude my session. Thank you, and keep in touch.
Thanks.
And
Thanks.
I'm open for question answer session.
Thanks, Azam. Yes, we're open for Q&A. I mean, I know we're running a bit over, but I think we can spend 5 to 10 minutes on Q&A. So if people can just maybe type in their questions if they have any, both from Etisham or myself, we'll be very happy to answer. And I think there was a attendee who requested कि जी उर्दू में अगर करते तो बेहतर होता, तो in the Q&A we can handle that. So if there are any questions, please do type them in the chat box and we can take it from there. Sham, do you want to handle the first question? मैं भी कर देता हूँ. वो है, how much room does the current index have upwards? मैं पहले बता देता हूँ, अगर let's see if Etisham joins in as well. देखें, हमारा तो वही होता है कि इंडेक्स पे we look at corporate profits and price to earnings. तो जैसे मैंने मेंशन किया कि मार्केट obviously बैंक्स एंड ENP हिस्सा है मार्केट का, तो अगर उनको देखें तो प्राइस टू अर्निंग्स रेशियो अभी 8 टाइम्स है फॉरवर्ड PE एंड 9 टाइम्स हिस्टोरिकल एवरेज रहा है. और अज्यूम हम करें कि यहाँ से ये एवरेज पे जाता है, तो आप कह सकते हैं कि रफली 15% तो गेन्स आप कर सकते हैं मे बी फ्रॉम नेक्स्ट 3 to 6 months. इतनी तो ऑब्वियसली देन फिर हमें बाद में और डेटा देखना पड़ेगा, हाउ इंटरेस्ट रेट्स आर बिहेविंग, हाउ कॉर्पोरेट प्रॉफिट्स आर बिहेविंग. लेकिन अभी अगर आप हिस्ट्री के उससे देखें तो अभी भी गुंजाइश है। और खाली पीई रेशियो नहीं होता, पीई रेशियो में एनालिस्ट के एस्टिमेट्स आते हैं। एक और चीज़ जो मैं आप लोगों को कहूँगा कि उसको फॉलो करिए, वो मार्केट कैपिटलाइजेशन टू जीडीपी है। इसको वॉरेन बुफे रेशियो भी कहा जाता है। इसको देख लीजिए, अभी हम तकरीबन 17% पर हैं और लॉन्ग टर्म एवरेज हमारा 21-22% है। यहाँ से भी आप कह सकते हैं कि यहाँ से 10 से 20% की तो गुंजाइश शायद नज़र आती है। बट अगेन व्हाट आई वुड लाइक टू एम्फसाइज इज, डू नॉट एक्सपेक्ट कि पिछले 5-6 महीने की तरह जो मार्केट बढ़ी है 50-55%, वैसी रैली शायद ना आए, शायद मोर ग्रेजुअल आए। तो बी अ लिटिल बिट मोर केयरफुल नाउ, और बिल्कुल समझ के स्टॉक खरीदिए जो आपको दिस इज बैक्ड बाय गुड रिसर्च, बैक्ड बाय गुड टेक्निकल फंडामेंटल्स। तो वो उनकी तरफ जाइए। हर स्टॉक अब शायद आपको इतना अच्छा रिटर्न ना दे। तो शाम, डू वांट टू ऐड ऑन दैट? अगर आपको कुछ बोलना है, मार्केट आपको कैसी लग रही है
Yeah,
यहाँ?
yeah, I completely agree with you, Raza, with your view. But as far as the long-term trend is concerned, obviously we need to see KG, what is going to happen on month-on-month basis and a quarter-on-quarter basis. So recently, as we have seen, like पिछले 3 साल से consistently हमारी market decline के अंदर थी, and then obviously we made a bottom around 26,000 level. और जो रेशोज मैंने दिखाए यहाँ पे, जिसके अंदर 200 डे मूविंग एवरेज के ऊपर मार्केट के स्टॉक्स कितने ज्यादा हैं, विच जेन्युइनली डिपिक्ट्स यू कि ओवरऑल मार्केट के अंदर कितनी स्ट्रेंथ है। तो इट्स नॉट जस्ट कि कोई एक स्टॉक या कोई दो स्टॉक मार्केट को इस वक्त रन कर रहा है, बट अक्रॉस द बोर्ड आप देख सकते हैं कि मार्केट के जो 200 डे मूविंग एवरेज के परसेंटेजेस हैं वो इंक्रीज कर रही हैं। इसका मतलब ये है कि ओवरऑल मार्केट के तमाम स्टॉक्स ही परफॉर्म कर रहे हैं, which basically is a very positive sign for the market momentum perspective, और जो मार्केट के ओवरऑल स्ट्रेंथ के लिए काफ़ी बेहतर है और ओवरऑल मार्केट की डायरेक्शन के लिए। प्लस आई वुड लाइक टू एम्फेसाइज हियर, अगर हम लॉन्ग टर्म मार्केट की टेक्निकल ट्रेंड्स को देखें तो ऐसा लगता है कि डिस्पाइट द फैक्ट कि मार्केट इस वक्त बढ़ गई है, ऐसा लगता है कि अभी ऑब्वियसली शॉर्टर टर्म के अंदर यू माइट सी सम कंसोलिडेशन गोइंग फॉरवर्ड, but from the longer perspective, I'm talking about quarter and quarter perspective or yearly perspective, for the next 2-3 years I'm very optimistic about the Pakistan's market performance, given the ratios that I've shown you right now, वो सारे favorable लगते हैं, and plus जो market की overall performance है from the RSI and MACD perspective on a weekly time frame, which is also very favorable. So I'm very optimistic about the market. But yes, I agree with Raza. You cannot expect a bumper return like we have seen recently for the last couple of months.
बाकी देयर इज अ क्वेश्चन, कुछ पूछ रहे हैं बैंक्स का पी क्यों कम है, व्हाई इज द पावर सेक्टर नॉट परफॉर्मिंग? आई थिंक सिमिलर रीजंस हैं इनके। अगर आप देखें तो बैंक्स पे भी पे आउट पे एक मॉरेटोरियम है 2 क्वार्टर्स का। आई थिंक वंस दिस मॉरेटोरियम एंड्स और इनके डिविडेंड्स वापस आते हैं तो आई बिलीव के इनकी भी पीई रे रेटिंग होगी। हिस्टोरिकली बैंक्स का पीई जो होता है वो मार्केट के उससे कम ही चलता है, थोड़ा सा डिस्काउंट पे चलता है, बिकॉज बैंक्स इनहेरेंटली उनकी अनसर्टेनिटी होती है। वी डोंट नो एनपीएल्स कितने आ सकते हैं, वी डोंट नो कैपिटल गेन कितने ले सकते हैं अपने बॉन्ड्स पे। तो अर्निंग्स में हमेशा थोड़ा सी अनसर्टेनिटी होती है रिलेटिव टू मैन्युफैक्चरिंग कंसर्न्स। तो मार्केट हमेशा थोड़ा सा इस अनसर्टेनिटी को प्राइस करने के लिए हल्का सा डिस्काउंट पे चलाती है। बहरहाल आपका पॉइंट सही है कि पी लो है, और वो जवाब इसका यही है कि जब डिविडेंड्स अनलॉक होंगे तो आप एक्सपेक्ट कर सकते हैं कि बैंक्स के थोड़ी सी पी री रेटिंग होगी। और आई थिंक जवाब उसमें यही आ जाता है कि पावर सेक्टर क्यों परफॉर्म नहीं कर रहा, उसमें भी इशू सर्कुलर डेट का और लैक ऑफ पे आउट्स का है। आई थिंक जहां आप देखेंगे पावर सेक्टर की लिक्विडिटी बेहतर होगी, पे आउट्स बेहतर होंगे, तो आई थिंक वहाँ पे भी री रेटिंग आएगी। और जहाँ तक सवाल बेस्ट इन्वेस्टमेंट डिविडेंड स्टॉक या ग्रोथ स्टॉक का है, डिविडेंड्स में तो आपने आई थिंक एक वन ऑफ द क्वेश्चन आंसर्स इट आपको अभी नहीं है, लेकिन एक्सपेक्टेड ये है कि आगे आने वाले वक्त में आपको विल बी अ गुड डिविडेंड स्टॉक। बैंक्स की भी हमने बात करी है तो एमसीबी में जो बेस्ट डिविडेंड यील्ड आ रहा है वो एमसीबी बैंक में है। तो आई थिंक ये देखे जा सकते हैं, पर्टिकुलरली बिकॉज ये बड़े अंडर परफॉर्मिंग सेक्टर्स एंड स्टॉक्स रहे हैं पिछले 6 महीने। तो हो सकता है कि अगर आगे की मार्केट में जो अंडर परफॉर्मर्स हैं वो कैचअप करें, तो हो सकता है कि आपको एन एमसीबी थोड़ा आपको बेहतर रिटर्न दे कंपेयर टू द पास्ट। तो श्याम, डू वांट टू टेक सम ऑफ द अदर क्वेश्चंस? अ लॉट ऑफ क्वेश्चंस हैव कम इन, अगर आप कोई देना चाहेंगे।
Uh, A question: what is the simplistic approach to identify actual market price worth of the share in comparison to overprice and underprice? Achha, from a momentum standpoint, I would suggest you to go and check the RSI and MACD approaches. That will basically help you to identify like this underprice and overprice reactions. So you can easily analyze from the historical perspective as well as from the current perspective. और उसमें आपको ये बिल्कुल अंदाजा हो सकता है कि मार्केट की जो प्राइस है वो उसके अंदर एक ओवर प्राइस एंड अंडर प्राइस सिचुएशन बिल्ट इन है या नहीं है, बिकॉज फ्रॉम अ मोमेंटम स्टैंड पॉइंट वी कंप्लीटली बिलीव कि प्राइस के अंदर बहुत सारे फैक्टर्स प्राइस इन होते हैं एंड यू नीड टू अंडरस्टैंड कि अगर कोई एक प्राइस बहुत ज़्यादा कंटिन्यूस बेसिस के ऊपर चल रही है तो उसकी जो मीन रिवर्जन अप्रोच है वो किस जगह पे आके फॉल करती है, क्या उसकी इंट्रिंसिक वैल्यूज को जस्टिफाई करती है या नहीं करती. आई थिंक यू नीड टू सी एज वेल, बट फ्रॉम अ मोमेंटम स्टैंड पॉइंट I think RSI and MACD is the better tool to basically gauge an idea of overreaction and underreaction.
Actually, there's a question directed to me. This is why expensive stocks such as Lucky Cement have historically outperformed. डिपेंड करता है, अगर आप कुछ लोगों की बात करें, एंड यू एब्सोल्युटली राइट, लकी सीमेंट बाकी सीमेंट कंपनी से बेहतर ही परफॉर्म किया है ओवर द साइकिल. बट अगर आप अगले 2 साल बाद की अर्निंग्स देखें तो अभी भी लकी सीमेंट आपको सस्ता लगेगा पी पे, बिकॉज द एनालिस्ट एस्टिमेट्स आर मोर देन ₹100 अर्निंग्स पर शेयर. और अगर आप उस तरीके से देखिए, ये 2022 की बात कर रहा हूँ मैं, तो उस पर तो ये 7 का पी भी नहीं है. आर्ग्यूबली यू कैन से कि नहीं, ये तो महंगा नहीं है कंपेयर टू अदर्स. बट इस तरह की चीज़ें देखें, इफ इट्स अ हाई पी स्टॉक, यूजली इट्स अ हाई क्वालिटी स्टॉक एज वेल. लकी के बारे में तो यही कहा जाता है, अच्छी कॉर्पोरेट गवर्नेंस है, गुड इन्वेस्टर रिलेशंस, गुड मैनेजमेंट. तो ये सब चीज़ें भी ना, ये भी स्टॉक प्राइस के पी में फीड होती हैं. तो आई फील लकी का तो यही है कि certainly it stands out among its peers, तो market is happy to assign a higher multiple to it, even though I'll say कि 2022 के नंबर्स पे देखें तो शायद वो हायर मल्टीपल अभी है नहीं, तो उस तरीके से जाए तो शायद लकी still looks good from a medium term perspective. Risham, any other question? Maybe in the interest of time, obviously we have run over, तो आखिरी अगर कोई क्वेश्चन अगर आप लेना चाहें तो हम कर सकते हैं, उसके बाद I believe we will probably have to close this.
Okay, one question is here from Mohammad Usman, and he's asking how much point difference should be in RSI when we are looking for divergences. देखिए जी, कोई point difference आपको देखने की जरूरत नहीं है. Obviously there are different levels of RSI divergences, level 1, level 2 and level 3. और जितनी level की divergences आ रही होंगी, आप understand कर सकते हैं कि trend reversal उतना ही strong होगा. So अगर if you are getting 1 degree of divergence, then obviously you might see the correction of 1 degree. But at the same time, if you are getting a multiple degree of divergence, so you might see a multiple degree of correction. Like for example, जो अभी मैंने आपको बताया, 2017 के अंदर we had a multiple degree of divergence, or that was pointing out way before the crash that you might get a long bear spell. So obviously you need to see whether you are getting a divergence in a multiple stair steps or a single stair steps or single level. So you don't need to concentrate on the difference point, but instead you need to see the level of divergence, level 1, 2 or 3. I hope I answered your question.
Thank you, Etisham. I think we with that we can conclude. बस एक चीज मैं कहूँगा, देखें, whether it is fundamental analysis or whether it is technical analysis, just understand these things properly. किसी का सवाल है कि जी, वक्त, there's always, कि पुराना वक्त है, can we compare the same economic cycles? पाकिस्तान में a lot of things have repeated. तो yes, there you can say that you can learn from the past, learn from past trends, learn from past levels. Whether it is fundamental or technical, understand thoroughly आप क्यों एक स्टॉक ले रहे हैं, और थोड़ा सा इन्वेस्टमेंट प्रोसेस में डिसिप्लिन लेकर आइए कि स्टॉक ले रहे हैं तो क्यों ले रहे हैं, और एट व्हाट पॉइंट वुड यू वांट टू सेल, तो वो उस डिसिप्लिन को मेंटेन रखिए. एंड ऑब्वियसली डू टॉक टू एक्सपर्ट्स, डू टॉक टू एनालिस्ट्स, बोथ फंडामेंटल एंड टेक्निकल, ताकि आपको समझ आए आप क्यों इस चीज़ में पढ़ रहे हैं. ये नहीं कि जी हर कोई आ रहा है तो मैं भी इसमें आ जाता हूँ. like we mentioned, और एक बहुत अच्छी rally हुई है, but it's you have to be a little bit more careful and smarter now. Thank you so much, attendees. बहुत शुक्रिया आपका. And with that, we will close the session. Thank you so much.